Hi, our group is called the Wolfpack, and the members in our group are Bronwyn Bates, Thomas Johnson, Catherine Rhodes, and Kenzie Walker. To start, ExxonMobil is one of the world's largest publicly traded international oil and gas companies. Exxon works to develop technology to help safely meet the world's demand for energy. The company has developed for over a century and is now an industry leader in almost every aspect of the energy and chemical manufacturing businesses. Exxon currently ranks 6th on the Fortune 500. The first article on the left talks about how on October 26, 2022, Exxon announced 2 new oil discoveries at offshore wells in Guyana. These discoveries have allowed the company to increase oil supply while creating value for the people of Guyana, partners, and shareholders. Exxon's offshore development now far exceeds the industry average. The article on the right talks about how CF Industries, a major producer of hydrogen and nitrogen products, with Exxon has reached the largest ever commercial arrangement to capture and permanently store up to 2 million metric tons of CO2 emissions yearly from its Louisiana industrial complex. Beginning in early 2025, the project will help Louisiana's goal of having net zero CO2 emissions by 2050.
If you look to the graph on the left, it shows the stock prices compared to competitors, Chevron and Valero, in millions of dollars. You can see that Exxon's current stock price is $107.55, and Chevron and Exxon have really similar stock prices, with Chevron's only being slightly higher in most cases and Valero's being much lower. And all three competitors have really similar spikes and drops in their stock prices. And then if you look to the sheet on the right, which shows the stock prices compared to the S&P 500s in millions of dollars, you can see that Exxon's prices are much lower than the S&P 500s, with far fewer spikes and drops in the stock prices over the year.
By looking at the profit and loss walk, you can see that the majority of Exxon's profits comes from sales revenue, which is $276,692,000. On the other hand, you can see that the majority of Exxon's costs or loss comes from crude oil and product purchases and production, which is $155,164,000. By looking at the red bars on this graph that indicate losses and the gray bars on this graph that indicate gains, you can see that Exxon has more sources of costs or losses than sources of gains or profits.
One of the main KPIs of the oil and gas industry is capital spent, or capital expenditures, as it's more commonly referred to. What this does is it provides a quick view into the year-to-date expenditures for the company and shows how much the company is spending to maintain their current assets as well as to get new ones. Typically, a positive capital spent indicates a business that is growing. And while Exxon has always had a positive capital expense recently, they have decreased their capital expenditures in the last few years, but are still outspending rivals Chevron by $4 billion and Valero by $11.5 billion. However, Shell in the last year spent $6 billion more on CapEx, which could indicate that Shell is making a push to try and dethrone Exxon as the largest oil and gas company.